Hello traders, this is Blake Morrow and you are listening to the week ahead video for November 15th, 2020. Hope everybody's having a great weekend. I do want to let you guys know I am filming this just a little early. We're going to start doing that typically. I used to film on Sundays, but I'm going to film on Saturdays. It really helps out our team because we have to upload the video, do graphics, there's post it on different places. It is a work in progress over the weekend, and we want to make sure that our team has ample time to do everything, so you guys can get this and watch it before the open of the market. So anyway, just letting you guys know, because if I'm saying something and then the markets may gap because of some new information that has happened over the weekend, you understand when this is being filmed typically. Now, this week is actually, will that come into play? Maybe, maybe not. Remember, we did have a presidential election here a couple weeks back. We have still not gotten a concession speech from President Trump, even though it seems every day that goes by increasingly more likely that Vice President Biden had won. But like I had mentioned to you for the last couple of weeks, he's not going to go away easily. And the reason why I mention that is because if he does continue to, push out lawsuits, or if he actually does concede, that could be a market moving event. So I just have to make sure I mention that to you guys. But before I get into the charts and what we're looking at going into this next week, I have to mention that if you haven't tried out ForexAnalytix, now is the perfect time. It's only $1 for 10 days. $1 for 10 days. And then when you try it out, you will get the premium version, which is normally $119 a month. You're going to get it for $1 to try it out for 10 days. Even if you want to go with a light version, which is $19 a month, you'll still get to try out the premium version for the next 10 days. Make sure you do download the mobile app. Whether you're getting it from the Google Play Store or the App Store, make sure you download it. This way you can have all of our analysis and the updates. And, when a support and resistance level is breached on ForexAnalytix, you'll get updated on your app. And that's nice, especially when you're mobile, knowing when the market's moving like that. So one of the benefits of using ForexAnalytix, one of the many benefits. Now I just closed out the data flash. The data flash is the real-time upcoming data when it is released. I just deleted it so it's off the screen, but it is available for you in the calendar. There's a lot of different features in ForexAnalytix that are available to you. And I'm not going to go into them right at this moment, but we're going to talk about going into this next week. So this next week, as far as data goes, we do have the Australian monetary policy meeting minutes. That'll be Tuesday morning or Monday night if you're here in the United States. We have retail sales next week. The RBA Governor Lowe, he's going to be speaking a couple times this next week. So, and then we have Australian employment. Then we have Canadian CPI and Canadian ADP private sector employment on Thursday. So there are a few things happening this next week. The overarching theme right now, it still is the United States and with the election. And if you go back in history, there are actually several times, and I don't have them written down, but there are several times throughout history here in the United States where elections were contested. There were actually there was one presidential election year, I want to say it was back in the early 1900s, where both Democrats and Republicans had, I forget who the president was, or the president-elect, and who was the president at the time. Both of them thought they won, and they both had ceremonies on And I heard this and I was like, wow, I can't believe that. And I should know more about American history than I do, which is shame on me. Yes. And I'm sure some of you guys right now are Googling it going, shoot, I didn't even know that. I'm gonna Google it too. But it's interesting. I do believe that this is going to take us right into January, which will it weigh on markets? It hasn't yet, and I know a lot of us had thought that that it would weigh on markets. I did, but I really think what will weigh on markets more than anything is social unrest. And right now, as of right now, and I should knock on wood or knock on my head or something, that let's just hope that things continue to stay calm. I think social unrest is the one thing that would derail the equity markets. I am a big believer that the markets don't really care who the president is. It's more of, if there's any fiscal policies being pushed, like, stimulus, or, what the Federal Reserve is doing, what the central banks are doing, not just the Federal Reserve. So that has, the major influence. I mean, you can go, well, under Democratic presidents, this, that, and the other thing, and under Republican, I mean, you can go ahead and try to make those arguments, but just in recent memory, you saw what happened to the stock market when George Bush was in office and President Obama was around during the bottom, right at the bottom, when the S&P was below 700, and look where we're at right now. And, yes, President Trump was around the last, 4 years. I mean, I think that really it has more to do with Fed. So I don't think that the markets are really going to be influenced a whole lot by who is in office at this moment, as long as we continue to see support from the Federal Reserve and then from, fiscally, from the government as a whole, like stimulus for this case. And speaking of which, one of the things that I think we also need to be very aware of moving into this next year, no matter who the president is, we got to figure out how the market is going to react to this coronavirus pandemic that continues to ravage not only the United States but around the world. And the more we face partial lockdowns, the more economic activity is going to slow. I mean, it is. We could sit here in the United States and say, well, we're not going to do full lockdowns. I don't believe we will. So that's good news, because that means that the S&P probably won't see these levels again, at least not anytime soon. But a partial lockdown, or if the infection rates continue to increase, it will start to weigh on consumer sentiment, because it will start to weigh on people, especially if hospitals get filled up and they're overflowing. People will say, oh, well, screw that, I'm not leaving. Whether you believe in it or not, there's going to be people go, whoa, the hospitals are full. And that was my biggest thing. It's like, okay, well, and this is, going back to the initial lockdowns. It's like, well, I'll probably be fine. And more than likely, my family would be fine. But if for some reason we had to go to the hospital, are you going to be able to get in? And that's like where you go, okay, maybe I'll just order, I'll, instead of ordering out, I'm just going to eat food from home, that type of thing. Anyway, I'm getting really far into the weeds here, but let's because we're already so far into this video, and you're like, okay, Blake, get to the charts. So let's talk about the charts. So here's the S&P. We're up against that megaphone pattern. And the thing about last week is when the major news networks here in the United States, prematurely or not, they announced Biden would be the next president, the market spiked up. And on top of that, we got news about some coronavirus vaccines, about positive results. So that was really great. It spiked up the market. The problem with that is when it spiked up the market and then it came back down, that means it squeezed out all the shorts. That's why I'm focused on this chart, because I think while we're below 3,600, and I know we closed really close to 3,600, and you can say 3,600, 3,620, which would be the 618 retracement right here, I'm sorry, 36.12. I said 20. I meant 12. 36.12, which would be the 38% retracement, which seems like where we might go at the beginning of this next week. As long as we stay below these levels, I think the risk is still lower. And where we have to be really careful, if you're long risk, you have to be careful below this level right here. Okay, that comes in around 35.30, 35.20, and then obviously 3,500, because below 3,500, then we're going to see this 34.48 level again. I'm just a little nervous because this spike up last week was a false breakout. A1, 2, it squeezed out a lot of shorts, so now there's less people short as a result. So keep an eye on the S&P. Right now, the S&P is moving currencies, and it has been for quite some time. It's kind of all one mechanism, if you will. But I'm going to point out a couple of things. First of all, the Kiwi. And I know I tweeted about this on Friday. If you follow me via Twitter, we broke out above 68 cents. That's great. All the shorts are squeezed out. Everybody's long. The problem is if we break back below 68 cents, I think that's going to be a very big negative for the Kiwi dollar, especially when you take a weekly chart and you go, okay, here's a bullish weekly chart. Well, kind of, that's a big long wick, but it still is in breakout territory. Problem is if next week we close with a red candle and we close back below 68 cents, that will be an official false breakout. That would be bearish for the Kiwi. The Aussie is failing to get above 73 cents. And if you were listening to the F.A.C.E webinar on Friday, the free F.A.C.E webinar, by the way, if you don't know how to register for those webinars, it's in the description of this video that you're watching if you're watching us on YouTube. If we break back below 72 cents in the Aussie, my opinion is we are range bound. And then what we're going to be doing is trading back down towards the bottom end of that range, which is 70 cents, right? So if we break back below 72 cents, we're going to be back at 70 cents. And as I mentioned to earlier, we have not only does the RBA governor not only does it speak a couple of times this next week, we actually have employment data out of Australia. We have the monetary policy meeting minutes out of Australia. There are risks that we can challenge the upper end or lower end of this range because of that. All right. Some of the other currencies that I'm really focused on right now, and if you're going to ask about the euro, no, I'm really not super excited about the euro right now. We are, in my opinion, we are range bound, and I'm not excited about it. That doesn't mean you can't, short it at 119 and buy it at 117. That might be more of the way to play the euro near term. But I am focused on some of these commodity currencies. You take the dollar Canadian. The dollar Canadian, we had a false breakdown last week below 130. It's a big deal because not only was it a false breakdown, it also respected the lows from back here in the end of December. Anyway, we had a little false breakdown in the dollar Canadian. So it's something that we need to watch, because if we get much higher than this 50-day moving average that comes in around the 132 level, there's a risk that we get, we trade back up towards 134. The moves that I'm showing you potentially in the Aussie and the Kiwi lower and the US dollar Canadian higher would also reflect a weaker S&P. So that's something that, we need to think about. If the S&P starts breaking down below, 3,500, that's probably going to be the catalyst that drives the dollar Canadian higher, the US dollar or the Aussie US dollar, the Kiwi US dollar lower as well. Okay. So those are a couple of things that I am paying attention to. The yen, I know a lot of people have asked about the yen, and I'm going to tell you, I'm glad I was not short early last week. And we were talking with a lot of our contacts at the banks, and the banks with the firm that I trade with, and the banks were reporting back to us that a lot of traders were caught on the short side on Monday of last week, and they were carted out. Our own Amanda Sweeney in our chat rooms, she was on the long side of the dollar yen. She reported back that she pretty much made her month last week in this move, which is great. she was, on the long side, but I didn't have any exposure, but I know from what I heard from these banks, they really got squeezed, and it makes sense because it looks, I mean, if you would have went back to pre Monday, the dollar yen looked extremely bearish, and then we squeezed right back to this trend line. You can see that trend line right there. So what that also tells us is, above 105.60, like on a daily close above 105.60, it would be extremely bullish. Again, I'm not really too sure how to trade the yen at this moment because I don't know what's moving it, and I always feel more comfortable when I have an idea of what's driving a currency, and I don't know if the dollar yen is being affected by the equity markets, the movement in the equity markets, which doesn't make any sense right now because you can see that the dollar yen's going down and equities actually went higher on Friday, or if maybe it's yields moving. So or maybe it's just M&A flows in Japan, which could very well be the case. So again, I'm not sure what's moving it, so therefore I'm not trading it, which probably served me well last week, not being on the short side of that, because technically it did look bearish, and then all of a sudden it ripped up a big figure plus, and then and then that was the result, right? Anyway, guys and gals, if you think that this video is going to be beneficial to you going into this next week, or if you really enjoyed my rants talking about a whole lot of nothing sometimes, make sure you give us a thumbs up on the YouTube channel, and make sure you subscribe to our channel so you don't miss any of the great content that we provide for free throughout the course of the week. Our team and Dale Pinkert does some great interviews throughout the course of the week, and you don't want to miss any of those. So if you're subscribed to our channel, you will be able to be notified when those come about. So guys and gals, my name is Blake Morrow with ForexAnalytix. Make sure you try us out. We'd love to have you part of the ForexAnalytix community, and I want to thank you all for listening in, and I hope you have a wonderful, wonderful remainder of your weekend. Thank you very much. Bye-bye.